David, this seems like it came out of the blue, but did we have any hint that this was coming? Was Volkswagen always kicking the tires on this?
We didn't have much of a hint that it was coming, but Rivian was clearly out there raising money and they needed cash. They've been burning cash. And given the low production numbers that they had, it really didn't seem like they were going to get to cash flow positive anytime soon. So they needed money. There were maybe financial partners out there they could have gone with, but this helps them a lot. And also helps Volkswagen, by the way, but it helps Rivian because now they have a partner, big auto company that has production, has engineering, has a big parts bin that they can get to for non-EV kind of parts. So maybe they can lower their costs a lot faster than they could have going on their own, selling, building 50,000 vehicles a year. And for Volkswagen,
why is Volkswagen doing this? I thought they had their own EVs.
They do, and they have their Scout unit that's supposed to make electric trucks, but they might get access to Rivian's pickup and SUV.
Although it appears unexpected, did we have any indication that this might happen, David? Was this something Volkswagen was always testing? Rivian was obviously out there seeking money, and they needed money, but we had no indication that it was coming. They've been spending money, and it didn't appear likely that they would achieve cash flow positive status very soon, considering their poor output levels. They therefore required funds. They may have had other options for financial partners, but this is really beneficial to both them and Volkswagen. It also benefits Rivian because they now have a partner, a large automaker with engineering, production, and a large parts bin that they can access for parts that aren't EV related. Thus, they could be able to reduce their expenses much more quickly than they could if they were to sell 50,000 cars a year on their own. And this is what Volkswagen is doing. They had their own EVs, I thought. They have a Scout section that is tasked with producing electric trucks, but they may also have access to Rivian's SUV and pickup. If you have been following the EV scene, you are aware that it is becoming hotter and that Tesla is at the forefront. We'll examine the most recent market developments, the substantial investments made by big automakers like Volkswagen in rivals like Rivian, and how these actions are influencing the sector today. We're delving deeply into the strategies underlying these investments and their implications for Tesla's future, not simply the statistics. Why would this be the ideal moment to buy more Tesla stock? What distinguishes Tesla in the face of intensifying competition? We'll look into these and other issues, giving you thorough information and analysis that may help you make better investing choices. So fasten your seatbelts and prepare yourself for a thorough analysis of the reasons why Tesla's stock might be about to soar. For updates on our most recent videos, don't forget to ring the bell and click the subscribe button. We have a wealth of important information about Tesla stock news that you won't want to miss. The focus is on the electric vehicle sector, where Volkswagen's large investment in Rivian, a prominent rival of Tesla, is drawing attention. Given that Rivian is the one getting the financial boost, you may be wondering why Tesla is the center of attention. This is why it's important. Rivian has been spending a lot of money. In the last quarter alone, they spent an incredible $1.5 billion. Without Volkswagen's financial boost, Rivian's future looked bleak, with the company perhaps going bankrupt by the end of the year. Beyond merely keeping Rivian afloat, Volkswagen's decision to spend up to $5 billion in the company says a lot about the competitive environment in the U.S. electric vehicle market, where Tesla is the main competitor. One could argue that Volkswagen's strategic decision was an attempt to counteract Tesla's increasing power. Take a moment to consider this. If not for harsh import regulations and sanctions, Chinese electric cars, which are renowned for being reasonably priced, may take the lead in the worldwide market. This scenario depicts a very competitive market in which established manufacturers are making a valiant effort to catch up. Moreover, the market for electric vehicles covers much more than just the design and production of automobiles. It also includes strong political clout and deeply rooted customer preferences. Influential people like former President Donald Trump have made high-profile remarks that have greatly influenced public perception. Trump's criticisms, which frequently highlight alleged disadvantages of EVs like their short range and charging problems, are predicated on outdated EV models and could not fully represent the industry's recent developments. For electric car manufacturers like Tesla, this political involvement has produced a difficult atmosphere. It can cause widespread caution among prospective purchasers when a well-known political figure expresses mistrust, which can impact market sentiment and potentially even investor confidence. Furthermore, these political pronouncements have the power to affect financing priorities and regulatory rules, which are crucial for the development and spread of the EV market, in addition to influencing customer choice. Consumer preferences are another important factor that contributes to the complexity. Changes in consumer behavior and attitudes on the feasibility and practicality of EVs are key factors in the transition from conventional gasoline-powered vehicles to electric ones. In order to preserve and improve its market position, Tesla must constantly negotiate these shifting sands of governmental power and consumer views, even in the face of its inventions and market supremacy. Tesla's business environment is made more complex by the interaction of politics and public opinion, which innovations they support. Now let's look at Rivian's position. In spite of its financial difficulties, the company has established a niche for itself by creating premium cars that are able to connect to Tesla's charging network. Volkswagen's investment may allow Rivian to keep improving its products, which could lead to an increase in its market share through at least 2026. Such developments may be important for anyone who are interested in market dynamics and investing strategies. It is a gripping story of how established automakers are negotiating the transition to electric cars and working with startups like Rivian to challenge Tesla's hegemony. One must consider the future of the electric vehicle sector and how these investments will affect the competitive environment as we watch these calculated actions. The financial community is intently monitoring the actions of big players like Volkswagen as the electric vehicle industry heats up, as the company seems to be strategically hedging its bets on Rivian. Volkswagen is effectively banking on Rivian's success with this strategy, which is similar to placing a call option on the company in case traditional manufacturers have trouble keeping up with the quick adoption of electric vehicles. These actions highlight a more general attitude in the formal auto business. There is a real concern about Tesla's increasing power, particularly as battery prices drop and might further increase Tesla's profitability. Lower borrowing rates provide a lot of potential for the electric vehicle sector, especially for businesses like Tesla. In general, lower interest rates lower borrowing costs, which helps customers fund expensive purchases like vehicles and allows businesses like Tesla to invest in growth and innovation. For Tesla, this financial climate may act as a stimulant, giving it the power to quicken development and boost production capacity. This possible interest rate cut could be a game changer for Tesla. It would increase consumer affordability and enable Tesla to finance its ambitious ambitions at a lesser cost, which might increase demand for its cars. In a setting like this, Tesla might have a clear edge over established automakers, who are still making the switch to electric vehicles and are frequently hindered by the delayed adoption of current infrastructure and technology. Additionally, a spike in the value of Tesla's shares may result from the industry stabilizing after the adjustment to reduced financing rates. Tesla's market value may rise as a result of investors realizing the improved profitability made possible by lower finance costs and higher sales volume. Together with its strong product selection and established market leadership, this increased investor trust may put Tesla far ahead of more established automakers. Market observers are also keeping a careful eye on Rivian's financial situation, as the company is a direct rival and has received significant investments from Volkswagen. Rivian's continuous financial troubles, which are sometimes called a fire pit of cash burn, highlight the challenges faced by newcomers to the electric vehicle market. Notwithstanding these difficulties, Rivian plays a critical part in Volkswagen's plan to challenge Tesla's hegemony. Volkswagen's backing shows that the company is strategically placing bets on several fronts in the EV market, underscoring the fierce competition Tesla faces. The interaction between up-and-coming rivals like Rivian and well-established titans like Tesla highlights the competitive tactics and broader market dynamics. The capacity of Tesla to take advantage of advantageous economic conditions and overcome competitive obstacles will be crucial in establishing its long-term position in the global automobile market as it innovates and broadens its reach. This complicated situation is further complicated by the political environment. namely the public positions of individuals, such as Donald Trump, opposing electric vehicles, in contrast to Elon Musk's calculated moves, including his contacts with Trump. Speculation about Musk's Project Dojo, a component of Tesla's ambitious goal for autonomous driving technology, is thought to be downplayed in order to obtain crucial components from NVIDIA. This political maneuvering also extends to technological techniques. The technological advancements in the EV industry and how major businesses are preparing for a future dominated by electric mobility are also discussed, in addition to financial investments and market tactics. How do you feel about these developments? Are these calculated investments only a buffer against possible future events, or do they indicate a more significant change in the auto industry? It's crucial to keep an eye on Tesla's stock as it lingers around $200 and possible selling pressure is expected. For Tesla and the larger EV market, might this be a watershed moment?